Hey traders, checking in on the stock market today. So a bit of a rug pull day, bears having complete control. One of those days where all of our major sectors are at the lows at the same time. Euphoria ending to a certain degree. And now we zoom out and see, is this healthy weekly consolidation? Should we be looking to buy weekly higher lows, or is money leaving the market and we need to be a bit more cautious and a bit more patient before we look to be buying the dip? Let's see what the charts say.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So first off, I'm not going to address the GME Reddit phenomenon in this video. It's certainly fascinating, but I just put out a separate video where I talked about all that, so check out that video on our YouTube channel if you're interested in on my opinion on all of that stuff. Let's look first at our earnings reactions here after hours. We have Apple. Not sure they've reported yet. Where we close on Apple. Don't think, if we have, it's a non-reaction, but I don't think we've reported yet. We've got Tesla. Bearish reaction initially, but nothing massive. Anything above 800 keeps the daily bulls holding on fairly well. So we'll see if the bulls are able to recover into the open tomorrow. It's a bearish reaction. It's not a significant one. And Facebook, same thing. Bearish reaction, not very significant. And SPY, in response to that, after hours, had a drop, but pretty much where we closed, a little bit lower. So pricing in that information from after hours, we'll see what Apple gives us as far as an earnings reaction as well. But with all of that, we've got a bear drop today. And what are the number of things that we're looking for when we are watching to see if the bears are proving it? We're watching for volume, check mark, easily over, almost double the 20-day average volume. Number two are all of our sectors at the low of the day at the same time. Our major sectors, healthcare, financial, tech, check mark for the bears. Has the dollar broken bullish? Not yet. So we'll keep an eye on that one. And this was a rising wedge. And again, I've drawn it a couple different times, but you can always adjust your lines just a little bit so it's still in play. Now we're clearly breaking bearish from this rising wedge. So I have had protection on ever since Monday. Monday was a day that just felt different and odd. I did not like that the S&P 500 dropped $6 at the exact same time that GME dropped 40% with this hype and euphoria. It's just felt like I said on the live stream today, like there's a change in the air. The winds are changing. It's just this feeling. It's just a bit different. So for me, with knowing how extended we are, that means be cautious. So my portfolio right now is a little bit exposed on the short side. I exited a bunch of longs on Monday. I entered that hedge position. And on a day like today, it allows for a lot of psychological clarity where I woke up this morning and my portfolio was a little bit higher with the gap down open. And just being very calm, cool, and collected because there's nothing I have to instantly be doing or acting on. I was just riding the positions that I already had, looking to play a couple little bounces, but overall staying in my short position unless bulls give me a real good reason to exit that short position. An hourly trend change would just be step number one for me to even consider exiting my bearish protection. So the levels we're watching right now, SPY broke support of 370, 370. And just like that, we're seeing the lowest price that we've seen in a few weeks now. So we've got 364.82, 362.03. Again, we've had a couple big bear days, but they've been one-off days. And they've given us support levels on those drops into continuation. So the question now is this the same thing, or do bears get followed through? A gap down tomorrow, we would say, okay, this is different. We haven't seen anything like this in a while if we see a gap down open tomorrow. And on the hourly time frame, we know we're just looking for an hourly lower high on any bounce. The S&P 500 futures chart, the 4-hour RSI is the oversold significantly, and it's the first time it's been that way since October. So it has been a few months since we've seen this. And again, the bear volume is very notable. We're just going to be looking for a 4-hour lower high. So I always want to see follow through if the bears are going to prove it. If the bears are not going to prove it, we're going to bounce significantly. We're going to see a size of a retracement that allows for a setup for a trend change. If the bears are going to keep proving it, we're going to see a lower high and lower low. and confirm a 4-hour downtrend and see bear follow through. So again, just taking it one day at a time, but a very notable bear day today, and that should get our attention in a big way. IWM, loss of short-term support levels. Next level is 204.66 support, and then I'm looking at 190.94 is the next level. So again, I zoom out and I go to the weekly time frame. IWM bulls on the weekly time frame have nothing to worry about at this point. And we could pull back for another, if 3 out of the next 4 days are red, we're still going to be looking for a weekly high or low unless there is massive bear volume behind it. But there's a lot of space for these bulls to work with. S&P 500 as well, the weekly time frame hasn't even tested EMA 12 yet. If we do test that level and lose it, we'll zoom out and we'll look for a monthly higher low to form. So weekly higher lows on watch. When we lose the weekly uptrends, we zoom out and we look for a monthly higher low. But IWM has more space to work with to maintain the weekly uptrend than SPY does. QQQ, big bear volume. Again, we're watching to see what Apple's earnings are going to be, but overall, there are no red flags on this pullback, aside from obviously the attention that the bears got from us today. But we would have to break 310.58, which is another 3% plus to the downside, if we're going to say, uh-oh, bears are proving it, because we've got an uptrend that the bulls have been holding for a long time, and we're still holding it at this point. So bear follow through is needed. Weekly time frame, space for a higher low to form, EMA 12 support, and 305.18 is our weekly higher low little support level to be keeping an eye on. Financial sector weakness. So that's what stood out to me today. I saw tech sector weakness, and the first question was, do we see rotation? Do we finally get the weaker financial sector bouncing now that the tech sector is seeing a lot of profit taking? And obviously the answer was a big resounding no, which showed us that it was going to be a weak day today. So bear Marubozu candles 2 days in a row, high bear volume, weekly time frame still here, still in an uptrend. Here's our EMA support. And we're looking at 28.83 and 28.11, two key support levels coming into play. And the bulls are going to look to maintain this weekly EMA 12. That's going to be important for me. If that level is held, this consolidation on the weekly time frame is no big deal. If that level is lost, then again, we will zoom out and we'll look for monthly consolidation to then be underway. And that'll be a bit of a double top. We only broke resistance by 1% there. So if we were to lose the weekly uptrend from here, I would call that a double top at all-time highs. Healthcare, big bear day, dropping and losing the daily uptrend. We zoom out. Weekly, still holding the EMA 12. Still plenty of space for a weekly higher low to form. Bears would need follow through. So one way to play these pullbacks, if I want to be an aggressive bull and I don't want to wait for the bounce to get started. Maybe I've missed all these bounces and this is a dip that I'm going to be looking to buy. Let's just use this as an example. I could be scaling into weakness as long as I allocate that the risk, I put my stop, let's say at 109.37 and I enter at 114, 112, 109, and then I put my stop under 109. Well, okay, 114, 112, 110, and then I put my stop under 109. And that's a way that I can scale into weakness and establish a position, yet still protect myself in case this time is different and in case this weekly consolidation becomes more significant. I'm watching the dog Sweetie Pants interact with a deer out there. Deer took off, but I'm slightly distracted. Biotech sector, big daily pullback, double top of the all-time high. And daily support still holding 148.81. We held it by 7 cents today. Nice oversold bounce level off of that daily support. How's that for a bounce? $10 bounce right off daily support. We gave a lot of it back. Now it's up to the bulls to change the hourly trend, but that was a massive bounce. Double bottom, double top. So that's the range we're watching in the short term. If support breaks, we zoom out and we look for a weekly higher low, anything above 138.91. Semiconductors, big bear volume, rolling over. Zooming out to the weekly, plenty of space still. Anything above 210.80 is a weekly higher low. Weekly EMA 12 support is in play. TAN, the solar sector, another one with a bit of a double top. Not a convincing bull break. A break of 106.88 would be a notable momentum shift. We would then zoom out and look for a weekly higher low with weekly EMA 12 holding for many months, keeping that an important level for us to be paying attention to. MSOS, I started scaling in today. slowly because I'm going to scale in down to the weekly EMA 12, which is still a ways away. But I've been patiently waiting for this weekly consolidation for a while. And there's tons of space for a weekly high or low here after that all-time high blue sky breakout. So this is one that I've been scouting and stalking, so to speak. So I am acting on this one now slowly, and I will add down into the mid-30s. Otherwise, as far as other bounces, I'm being patient. Again, I have no reason to act. I'm taking it one day at a time. It's been a great January with gains, and I'm not going to go aggressive here trying to nail a bottom of a bounce. I would rather watch the bounce play out and leave some gains on the table and then get a more clear picture of things. If I'm going to be scaling into weakness, I need big fear. And that's what I did back in March when I entered my SPY long-term no-touch position. So we're not at that level of fear. One, big red day, certainly not going to do it for me. The VIX, what stands out here? The close. I talked about it in the recent past. We have not been closing at the high of the day at any point. This is different. This is showing us momentum, which again, if we see a gap down open tomorrow on the S&P 500, we'll say, okay, this time's different. So we're watching that very closely. A massive big candle, 41.20. And after 41.20 is 44.40. And looking at this from a monthly perspective, clearing those levels would be extremely notable. Similar period here, just a downtrend, lower highs and lower lows, and then a big, obviously we're not going to be looking for something this size, but a big move in a similar period of consolidation here. Question is, does this big move have follow through? The dollar, this is one aspect that the bears want to see and that the bulls are paying attention to, because we held support. We did not break support after the weakness yesterday, but we also did not break resistance today. Have to get over 90.95 if our asset bulls, crypto, metals, stocks, if we're going to look at that and say, uh-oh, this bounce is for real, we have to get over 90.95. So if we do want bear follow through, this level has to break. So again, we got all these little check marks. This is one that is not checked off yet because we're not breaking the dollar daily resistance at this point. If we do, the weekly bear flag will likely be negated. We'll be getting over the weekly EMA 12 resistance for the first time in a couple months, and we'll be watching to see, can the bulls create enough space to change the weekly trend back in their favor. That was a bad job. Change the weekly trend back in their favor. Gold inside bar bear break, but bulls are buying the dip. There's not a rush to the exit in the metals, which is a good sign. We're not seeing the same fear. There was a correlation to SPY and the broader market, but the bounce is a lot more notable just because we didn't close at the low of the day. We haven't changed the hourly trend bullish, so the metals bulls are not proving to us that our bottom has been hit. But I need to see a 4-hour trend change back to the bulls to say our daily higher low is set. Bulls have to hold 1802 and break 1875 to confirm the daily trend change and set the weekly higher low. Silver's the same thing. Again, I like, I'm in these long positions where I'm playing based off of monthly support. I like the fact that we closed with these long lower wicks when SPY closed at the low of the day. It's a notable difference to me, and I'm liking that we're not tick for tick correlated with the broader market. Miners, however, very weak and did close at the low of the day. So the impact of the S&P 500 has the miners trading at their low of monthly consolidation. They're a lot weaker than metals. I could look at gold and silver, and their percentage distance that they are from their monthly support level is still pretty significant. Gold is 4 to 5%. Silver is going to be double-digit percentage, I believe. But the miners are right there, 33.25, 2% away. So keep an eye on that level, and if it breaks, we have a confirmed monthly downtrend. That would be very notable. It's not a picture-perfect confirmed monthly downtrend. It would certainly be continued weekly downtrend with lower highs and lower lows prevailing. And we would be watching weekly oversold conditions approaching, which had a beautiful bounce last time that happened. But if 33.25 breaks, that's what we're then going to be watching. Oil still holding on. Inventory report, a non-event at this point. The weekly bull flag is still in play. We would have to see a bear break of 51.44 with bear follow through if we were going to see if we were going to say that our weekly bull flag is no longer in play. Natural gas, solid bounce on the daily. And let's condense this to the 2-day chart because we got an equilibrium forming where we've got our low of the pullback, high of the bounce, higher low. Anything under 290 is a lower high. Let's see if we tighten up from here. Bulls will be looking for an entry, playing off of 242 support, hoping for a confirmed daily trend change. Bulls then need to confirm a weekly trend change. So one time frame at a time. Once this move tops out, once we lose the 4-hour uptrend, we then look for the daily higher low. So that's where we stand overall. Stay protective. Plenty of euphoria out there leading up into this. The more euphoria we have, the more protective and cautious we need to be. We know that euphoria ends fast, hard, and out of nowhere. And that happened today. And now it's just a question of, do we get follow through? Does the dollar break that resistance? Do we gap down tomorrow? Do we see a 4-hour lower high and lower low on this S&P 500 futures chart? Those are all questions that I'm looking to be answered in the next couple of days. So I hope you're well, do good things. Check out that Reddit video I made on our YouTube channel, and I will see you all tomorrow.